Hello everyone, welcome to today's session on GST filings. Today we are going to see the GST compliant invoice formats. We'll try to understand the tax invoice components, difference between tax invoice and bill of supply, and the common mistakes while issuing tax invoices. So if you are a business owner or an accountant or a GST practitioner, understanding how to issue a proper GST invoice is critical. In this session, we will break down the required format, components, and we'll see the mistakes while issuing of tax invoices. So before proceeding with the topic, let us quickly recap what we did in our previous session. So in our previous session, we learned about the HSN and SAC codes. HSN is issue, cut, start. HSN is used for goods, whereas SAC is used for services. We also took an overview of the CBIC official website from where HSN and SAC can be fetched. Also, we saw the GST portal and how it helps in finding the correct HSN and SAC codes. So let's start with today's topic, why GST invoice matters. Before jumping into today's session, let us first understand why GST invoices matters. So GST invoice is a legal document that establishes sale or supply of goods or services. It acts as an evidence for the execution of sale or provisioning of services. It is a basis for claiming input tax credit for buyers. That is, the input tax credit rules clearly states that if you don't have a valid tax invoice, you cannot claim input tax credits. It helps to ensure compliance with GST rules and avoid penalties. Also for buyers, it acts as a proof of taxes paid and avail input tax credits. So issuing the right invoice helps in staying compliant, getting paid, and enabling ITC. GST invoices are also accepted as a evidence in case of lawsuits at the consumer forum or other judiciary benches. So what are the different types of invoices under GST? Let us understand the various documents that act as invoices under GST. First one is tax invoice. Tax invoices are issued for regular taxable supplies. Then bill of supply. Bill of supply are issued for exempted goods or services or issued by composition scheme dealers for their supplies. Then credit note or debit notes. Credit note or debit notes are issued to adjust the value of earlier invoices or for any adjustment in the outstanding balances. Then receipt, payment or refund vouchers. These are used in case of advance payments or in case of refunds. So tax invoice. A tax invoice is a document that outlines the details of a transaction between a buyer and a seller. It typically includes information such as name, address of the seller and buyer, a description of goods or services, the quantity and price of the item, the applicable taxes, and the total amount due. Tax invoice must be in the prescribed format. At the time of filing of GSTR1 return, all the relevant details of tax invoice are required to be filled up in the GSTR1 return. Details like invoice number, invoice date, taxable value, quantity, then buyer's GST number, etc. All these fields are required to be filled up in GSTR1 return. So next is bill of supply. Bill of supply is a document issued by certain businesses under GST when no tax is charged, such as by composition dealers, by exporters, or the supplier of exempt goods or services. Its purpose is to provide proof of the transaction while ensuring GST compliance for non-taxable supplies. So if a supplier of goods or services is not collecting any tax, he cannot issue a tax invoice. He has to issue a bill of supply. That is, if the seller is selling only exempted goods or dealing in exempted services, then he need not issue a tax invoice, rather he will issue a bill of supply. Also, in case of inter-unit transfer of goods, that is the movement of goods among entities, it can be moved through a bill of supply. Also, in case of transfer of goods from one location to another or from one branch to another branch of the same entity, a tax invoice cannot be issued, rather a bill of supply needs to be issued. So next are the debit notes and credit notes. Businesses use debit notes and credit notes as official document for accounting sales return and purchase return transactions. These notes inform the buyer how much credit they have or how much further they owe to the vendor. So debit notes and credit notes are both accounting documents used to adjust the financial transactions. A debit note is issued by a buyer to the seller indicating an increase in the amount owed. Reasons can be like additional expenses, discount, or returns. Similarly, a credit note is issued by the seller to the buyer indicating a reduction in the amount owed. Again, the reason can be discounts, overcharging, or error in original invoices, etc. Then there are receipt, payment, and refund vouchers. Receipt, payment, and refund vouchers are used for special circumstances like in case of GST on advance, that is, in case of advances against services, GST is required to be paid. So, in case of advances, a receipt voucher is required to be issued and it has to be disclosed in the GSTR 1 return. Similarly, refund vouchers are used for claiming refunds. So, what are the mandatory fields in the tax invoice? Invoice number. So, the invoice number must be in sequence and it should be unique. At the end of each financial year, the taxpayer must reset the invoice number, and with effect from the first day of the next financial year, a new sequence should be started. Then the date of issue, that is the date of invoice. Next field is supplier detail. Supplier detail should include name, address, contact details, and GST. Then recipient details. Recipient details like name, address, contact details, and GSTIN of the recipient in case he is a registered party. Then place of supply. Place of supply is a mandatory field in case of interstate supplies. Then HSN or SAC codes. So the invoice must contain 8-digit or 6-digit or 4-digit as the case may be, the invoice or the SAC code as per the rules. Description of goods. Invoice must contain a brief description of goods or services under the invoice. Then quantity and unit. Invoice should contain the quantitative data along with unit of quantity. Then taxable value. The value on which GST is charged must be there. Then rate of GST, that is rate of GST in percentage must be there in the invoice. Under different heads, that is CGST, SGST or UTGST and IGST, whichever is applicable. Then the amount of tax. Next is the total invoice value, that is the taxable value along with the tax amount. And finally, the signature or the digital signature of the supplier. Other optional fields can also be added to the invoice like PAN, purchase order number, transporter details, etc. So let's have a look at a sample GST invoice. This invoice consists of supplier details, consignee details, and the buyer details. There can be a case where the billing has been done to a certain party, but the delivery address is different. In that case, both the consignee and buyer details should be there in the tax invoice. Then invoice number, date, description of goods, HSN or SAC code, quantity, rate, then discount percentage, and the final taxable value. At the bottom, we have the bifurcation of HSN or SAC code under CGST and SGST. So this invoice contains all the details as required by the GST. Moving ahead, let us see the invoice numbering rules. As per the rules, the invoice must be serially numbered and it must be unique. It can include alphabets or special characters. It can be resetted every year or quarterly or monthly basis, but it must be consistent. Then it must be unique for each financial year. That is, at the end of each financial year, a new series should be started. Then the rules regarding time of issuing invoices against goods. So the due date of issue of invoice is governed by section 31 of the Act. There can be two scenarios. One, movement of goods is involved, and another is movement of goods is not involved. So in case where goods movement is involved, the due date for issuing of invoice will be before or at the time of removal of goods. In case where movement of goods is not involved, the due date for issuing of invoice will be before or at the time of goods making available to the recipient. Also, there can be a case of continuous supply of goods. In such a case, the due date for issuing of invoice will be before or at the time of issuance of periodic statement that we call progressive statements, or receipt of payment, whichever is earlier. Next is the sale of goods on return or approval basis. In this case, the due date for issue of invoice will be earlier of before or at the time of approval or 6 months from the removal of goods. That is, once the approval is received, the invoice is required to be issued that moment only. Where approval has not been received and 6 months has lapsed, then upon the expiry of 6 months, invoice should be issued. Also, there can be a case of advance. GST is levied on advances in case of services. So in case of advance, issue of a receipt voucher at the time of receipt and tax invoice is to be issued at the time of supply. Time of issue of invoice in case of services. So the time for issuing tax invoice against services will normally be before or within 30 days of provision of services. In case of banking, insurance, financial institutions or NBFCs, the time limit will be 45 days from the provision of services, or in case of supply between distinct person, then before the expiry of quarter during which the supply was made. Who are distinct person? So distinct persons are the person with different GSTIN belonging to one legal entity. That is, on a single PAN, multiple GST can be obtained. Such entity may be situated within the same state or in other states. Then in case of continuous supply of services, that is for more than 3 months, if due date is ascertainable, then the due date of payment. If the due date is not ascertainable, then the actual date of payment will be the timeline for issue of tax invoice. Or in case where a milestone has been set, then upon the reaching of such milestone, tax invoice must be raised. However, if supply is ceased before the completion, then the invoice must be raised before the completion of the service. E-invoicing. Let us now understand what is e-invoicing. E-invoicing is applicable to suppliers who are notified person and are engaged in B2B supplies or export. Who are notified person? Notified person are those registered taxpayers whose aggregate turnover is more than rupees 5 crores in any preceding financial year from 2017-18 onwards. So, even if your turnover hasn't exceeded rupees 5 crores in the current financial year or in the previous year, then also you are required to generate e-invoice if your turnover ever exceeded rupees 5 crores from 2017-18 onwards. E-invoicing does not mean generating invoices on government portal. Rather, it is only reporting your generated invoice on the government portal. The portal is Invoice Registration Portal. We call it IRP. So the provisions of e-invoicing are not applicable in case of input service distributors, SEZ units, insurance, bank, financial institutions or NBFCs, then GTA services, passenger transportation services, admission to exhibition, cinema or multiplex, then government department or local authority also doesn't come under the e-invoicing provisions. Okay, so let's see what is bill of supply. Bill of supply is a document issued by certain businesses under GST when no tax is charged, such as it is issued by composition dealers, exporters, or supplier of exempt goods or services. The purpose is to provide a proof of transaction while ensuring GST compliance for non-taxable supplies. So, a registered supplier making exempted supplier shall not issue tax invoice, rather he should issue a bill of supply. Similarly, a registered taxable person paying tax under composition scheme shall also not issue a tax invoice, rather he will also issue a bill of supply. Then what are the common errors while raising an invoice? Missing goods and service tax number or entering a wrong GSTIN of the buyer. Then wrong HSN or SAC classification of goods or services. Then place of supply not selected properly. Duplicate invoice numbers, that is the invoices that has previously been issued are again issued. Then missing advances. In case of advances also GST is applicable. So in case of advances also invoices are required to be raised. That is a receipt invoice. Best practices. Use invoicing software so as to enable you to keep a record of your invoices generated and raised. Then verify GSTIN before issuing any invoice. It is always advisable to verify the GSTIN of the buyer from the GST portal. Then backup invoices. Always keep a backup of the invoices raised. And follow updates from CBIC. That is, any latest release or notifications or directions by the CBIC must be regularly followed. So that was it for today's session. Thank you.